Hi there, Frank here for premium members for the trading day of September the 18th, 2025, a Thursday. So the Fed meeting and news release is behind us and it's back to business as usual. Let's see what we can learn from today. Today's price action was typical, which means this was a red candle at one point, a scary red candle. Look at the small chart. Weak hands were probably taken out. And now we are back moving to the upside. So this is now behind us. And if you haven't done anything, which probably we didn't today, then we haven't missed anything because this is what the plan should be for tomorrow and perhaps even more. Now, just to be clear, this bullish rally will not last forever. We will probably collapse at one point or at least go through a correction. And at that point, we will be well positioned in gold and silver and everything else that we need to do at that time. So always cover your backs. But right now, our job is to be bullish with the crowd. Okay, let's also look at some other ones here, the other three, if there's any lessons we can draw from this. Instant reversal on the NQ, nice bottom tails, points towards the upside. This means that the bears have failed and the bulls are in control. Okay, also note this beautiful failure test here on the weekly chart, which shows probably one way or the other right here. This is what we can see also on the weekly chart right here. Beautiful. Now let's also look at the other two here. So which one you want to trade is really up to you. This looks good too. Also note the crazy tails both ways. You see back and forth. This is meaningless or just tactical price movements intraday on a typical Fed day. Look at this, the previous high. There's no sign of selling. Two very strong weekly green candles here on the YM. This is a bull market. Last but not least, the RTY. We have a couple of points here back to the previous high. So if you want to milk this, you see, then 25. This is a good plan for the next day or two here. We have a top tail, yes, but I think this is just because of the Fed day. I wouldn't assign a lot of importance to this top tail. I don't think this is a sign of exhaustion in this case. The exhaustion will probably be some form of it around the previous high. On to currencies, on which, generally speaking, I'm bullish, so no change in the plans. So tread carefully, and we have a lot of opportunities, so pick the one that you want to look at more closely on currencies. In general terms, I'm interested in the Swiss franc for the rest of the year, but we need to have a setup, and this is probably, I think we can ignore the top tail because that's probably just a result of the Fed day today. Okay, on to commodities, on which after a while we have an excellent setup here on CL. Look at this, the 1R would take us back to the previous pivot. This is a classic structure, and the daily looks good as well. Everything you need to do this trade is on the chart. The entry area, the trigger, which will come algorithmically if price moves, no doubt. We already know what the algorithm will calculate. If price moves, then the algorithm will have no choice but to give us a long signal, you see, probably on the close of the next candle. If there's no trigger, there's no trade. So if there is a trigger, this probably would be enough for a stop, and the 1R would take us back to the previous stop. Beautiful. That's how we do this. And gold and silver, long-term, mid-term, any term, I'm bullish. And depending on whether you are in a position or you're flat, this is, at this point, looks like a slide to the upside on the Keltner. We have a nice bull flag on the 4-hour chart. Depending on your resources, you might be interested in gold. I think gold's going to hit 4,000 pretty soon. And SI is the other market that we need to focus on if we want to benefit. Because this will, or well, most likely, I can't say the word will, but this is expected to hit 50 one way or the other. And just one little detail, if you look at the chart, long-term chart now, you will wonder why it's 55 or 56 is the previous high on the current chart. But remember, in 2011, that was actually 50. Silver never hit 55. Okay, so this is just, you see, this is just an adjusted, basically fake past price here, which is a result of the contracts expiring. This is natural on the futures market. So when you look at long-term futures charts comprising of a composition, of an artificial composition of various contracts over a long time in the past, this is never the real price. Nonetheless, we were there, and we know that the real target should be around 50, and it's a nice round number anyway. And there's still a way to go. So this could be, as we said, somewhere in the spring or beginning of summer, silver probably going to be the trade of the year. And of course, we can do this with ETFs as well as futures if you have the resources. But this is the opportunity right here. And this little failure test here is probably just the beginning of a bullish move, you see? So it could break down, anything's possible, but if it doesn't break down, then, and listen to me carefully, if it doesn't break down, then you have to take this structure very, very seriously, because this could be the beginning of the next stampede to the upside. And one way or the other, we should be long on this market, or if we're not long yet, then we should look to enter in this area somewhere. And again, the details don't really matter in this case. As always, manage your risk. Don't bet the farm. Don't be greedy. Just do the job, and we'll be back in the morning. Thank you very much, and mindful trading.